stop what you're doing. The way you're approaching trading is likely why you're not yet consistently profitable. But that can change, starting right now. You've probably seen countless videos promising quick profits and foolproof strategies. Let's cut right through the noise. Building a successful trading career isn't about finding a magic indicator. It's about building a robust trading business that pulls consistent profits from the market. How do I know? I'm Mike Bellafiore, co-founder of SME Capital, a premier proprietary trading firm with offices in New York City and Miami. We've built our reputation on one thing: creating elite traders. Many of our traders consistently earn 7 and even 8 figures a year because we provide them with a blueprint that works. In this video, we're going to share a piece of that blueprint with you so you can start building a trading business that lasts and pulls consistent profits from the market. If you're serious about your craft, your search for real, actionable guidance ends here. Let's get started.
I feel excited and nervous at the same time. I don't think I wouldn't be human to feel nervous in a high performance opportunity. I trust myself that I'll do good. I trust the analysis and the trade. I've gotten good guidance from SMB. The team's gonna do great. Near this 20-day moving average, which is our red line here, and that's the convergence of this pivot low VWAP on 523, which is that pink line. We rallied back above, and we've been holding that year-to-date VWAP since the, we'll just stick to the levels, just stick to the chart, stick to this.
Yeah, that's May 12th.
May 12th. Yeah, so that's cool that you know that, because then you could help me with that, and you could say the news for that day. The one thing I'd like to, maybe that we could have that he may not do is like, what were the ticks doing that day? I don't know.
I don't know.
I don't know the breadth. We had gapped up into that year-to-date VWAP and that year-to-date VWAP high, and traded 439% above its 20-day average volume.
The opportunity is really about competing. It's really about showcasing what you've learned and what you've been challenged by. This is your opportunity to compete. This is your opportunity to stand out. Let's see how you guys do.
The playbook's an exercise that you guys should be doing every day. It's an exercise where at the end of the day, you should go back and you should look for a trade that really worked. Either you made it and it really worked and it makes a lot of sense to you, or you heard or saw or found out or spotted a trade that really worked that maybe you weren't in, that you're gonna go back and you're gonna break down. The playbook is a template that we've put together that helps you to break down a trade into certain components, into certain variables, so that you can study the heck out of the best trades. Every day, at the end of the close, go back and deconstruct in this playbook template form a trade that made the most sense to you, whether you made it or whether you spotted it. All right, make sense? And then you're gonna compile all of these playbook trades from session after session of you trading. And that is going to be what you look to build your trading business. You're gonna ferret through the playbook trades that you've done, and you're gonna pick out the trades that you like the best, that you trade the best in real time, and you're going to do more of them. Okay, you'll measure your success with these trades in real time. The ones you do best, you'll keep more of. The ones that you don't do well with, you'll eliminate. All right, but you should not be making any trades during real time, during market hours, that are not already in your playbook. If you are making trades that are not in your playbook, that is you over trading. You should know exactly when you get into a trade why you're in it, what variables you were looking for to be in it, and how you're going to trade it. Does that make sense?
Yes.
Okay, and so to be able to do that in real time, we've got to do these exercises, this playbook exercise. We've been doing it from longer than I can actually even remember. This is what we've been doing since a long time ago, that all of our guys do at the beginning of their careers to build out how they're going to trade. Okay, makes sense. All right, so we're gonna go through, you're gonna trifecta this up, and you're gonna go through a playbook trade that you put together. You're gonna do so in the template form that we use. Now look, when you get a little bit older and a little bit more experience, you can individualize your playbook. Maybe you tweak something, add something, take something out. That's fine. At the beginning, let's stick with the template and get good at it. All right, but certainly feel free to individualize it. And what we're doing for you here with this template is helping you to construct a good trade, helping you to learn how to think through a trade like a professional. That's what you want you to do. All right. And then from there, when you learn how to think like a professional, you're going to be able to create many more trades than we ever teach you. All right, and you'll have a diverse, comprehensive, vast playbook with lots of opportunity. All right, so you're going to run through, this is your first time?
This is my first time.
All right, you're going to run through, for the first time, a playbook trade that you guys have put together. You've done so in a team?
Yes.
Okay. And we're going to go through each of the 10 variables that go into a playbook. All right, so we're going to go over the big picture. That's part of the playbook. Intraday fundamentals. That's part of the playbook. Stock selection. That's part of the playbook. Technical analysis. Hopefully you have that in there. Trade strategy. Risk management. Reading the tape. Technology. Trade review. And then I'll actually grade you guys on diligence again. All right. Now, Jeff talked about the opportunity. The opportunity here is for you guys to compete. Competing means getting a score of 80 or better on each of the 10 variables, which we're going to grade you on. Okay? And above 80 means you've done well. You've competed well for this exercise. Below 80 means it needs more work. We're in week 3 of the internship. Is week 3? Week 4?
Yeah.
Time flies. Okay. So you guys have been here about 4 weeks, and we'll go through that. As always, so you gotta get better than 80. How are we feeling?
Very good.
Feel good. I don't have the tape, so I'm already starting down at a 9, I feel like.
Colleagues, how are we feeling for these guys?
I think they'll do.
Josh, no?
I'm praying for you guys.
I
I remember the first one I did of this, and it was rough.
We have had playbooks go very poorly in the past.
So
But it's all like,
That's a comfort.
like Gary said, it's just a learning lesson. If the opportunity comes, we just learn from it.
If it goes really, really poorly, just remember there's a lot of room for improvement. So that's always positive. Hopefully it doesn't happen. I'll try not to yell at you. Jeff, I can't promise though. Jeff may fly off the handle at you guys. All right, so this is your first crack at it in front of us. What I love, so 80's the level you gotta hit. That's the number you gotta hit. There'll be 10 of these categories, and we'll grade you 1 to 10 out of each of these categories. All right. So, why don't you just tell us a little bit about yourselves and where you're at in your trading career, and then who's going to be the point person? Who's going to be the point guard?
Me.
Okay. And then why don't you get to your playbook, and we'll go through it. So tell us a little bit about yourself and how you guys got here.
My name is James Domino. I've been trading for just over 3 years. I started right with the winning trader and the DNA trader. I took that. I went off and got my CMT, my chartered market technician. Came back and did the mentorship with Justin February 2024. And so everything I've learned is pretty much from the S&P Capital, and a big advocate who's my CMT sponsor is Brian Shannon, which has gave me a lot of education on the volume weighted average prices. As we know, I like to trade the VWAP. So that's some background about me.
My name is Felix Durst. I'm from Germany. I've been trading for 3 years now. I have been offered a seat at S&P for a summer internship. and I'm very happy to be here with a lot of competitive people, smart people in this room, and I'm very grateful to learn from this group of people.
So I'm Misha Trupo. I'm from Austin, Texas, and I've been trading for 3+ years now. Super grateful to be here, and I'm a rising senior at Middlebury College.
All right, so we're going to start out here with the bigger picture. I mean, here we have the chart of the S&P 500, and we can see here that the SPY is gapping down near the 20-day moving average, which also coincides with that prior low anchored VWAP from May 23rd. So you've got the red line is the 20-day moving average. That pink is that prior swing low VWAP that we're gapping down into, which is our key level of support. Is that 593 and 594 level is our key level of support. We're noting that we have some overhead resistance at that round number 600 and 604. So that we're really monitoring that break of 600 and hold to confirm the upside continuation. 20 days ago, which is that red vertical line that goes across the chart, that was the neckline of resistance, and we've been rejecting that. And then we've actually broke above it the prior 3 days, and this is the first time we're pulling back and testing this former neckline of resistance. So that's our bigger picture for the SPY.
Okay, one little thing that I always find interesting. This is very good, but we've talked about this in prior meetings a lot, is prior low anchored VWAP from 523. Okay, great. Why does that matter? That should be called out on the chart as why that matters. Why does 523 matter?
523 matters because it's the prior swing low. If we could see here that we rallied up to the 600 level on the vertical line 20 days ago, and we rejected.
Yes.
And that was a potential change. That was when a change in character from those 3 down days started to change. So
that's where the buyers kick back in,
yes,
right? And
yeah.
so that's when we talk about specificity, when we talk about competing, you want to be able to pull up a playbook 10 years from now, read it, and instantly understand what was happening. And so that is something that is really important to get right. And it doesn't seem like a lot when you're writing the playbook, but think about it as the story of what's happening. And a good book you can pick up and read. I mean, Reminiscence of a Stock Operator, One Good Trade. These books were written a significant amount of time ago, and they're still.
Wait, what was that second book?
One Good Trade.
I'll have to check that out.
It was not written that long ago, but it was written a period of time ago. But those stories, you pick it up and you can read it.
Right.
You want your playbook to be very similar, that you can pick it up and you can just, I understand what was happening here. I understand the story of what's going on. Because that same or a very similar version of that story is going to play out over and over and over again. And you don't want to have to think through all the variables or like pull it together. You want it just right there.
Right, so it's like noticing this. Why did I put that? What's really the significance of that?
You thought it was important enough to put it in there. Why was it important enough to put it in there?
Okay. Yeah, it was that prior swing low. So we had that
Yep.
rejection of 600, and we could actually see it held the handoff VWAP from the year-to-date high,
Yeah.
which is the green anchored VWAP.
So really quickly, you want to say the buying started here. I'm looking at the anchored VWAP from where I saw the buying start. That's it.
Okay. So the buying had started after that rejection from 600. So we anchored that VWAP at 523, which we could see provided an uptrend to the prior neckline of resistance
Sure.
and above.
Yep. Simple enough. Yep.
So
Little things like that matter a lot when we're talking about half points in our scoring process, but those half points, you really want to compete to get those half points.
And then we have the similar setup here, very same chart here on the Qs today here. So similar setup, we had that gap down to the 20-day moving average premises, that same VWAP, that we had that change in character, but the vertical line we could see 20 days ago we declined, and that was the change in character where buyers stepped in. So that was that's why we anchored that. That gave us a key support level of 524.40 to 525. And we were looking for continuation or a breakdown. So, and if we lost the 524 level, we're going to monitor the 513, and we had overhead resistance above at 531, 533, 537. So now we're getting into
Okay, and so I like when we're going over the big picture to very clearly mark what the most important technical levels are for SPYs, Qs, and a corresponding ETF. I think you did that pretty well. I also like to think about if I were writing the nightly news for CNBC, what would I tell the audience are the most important ingredients that the market participants are interested in? So right now, tariffs, right now, Iran-Israel war. I think that's fair to say, right?
yes.
Is the war with Iran and Israel going to spread, or is it behind us? Are tariffs likely to be behind us, or are we going to have more of that as a headwind? Okay, and to Jeff's point, this is going to be your database from which you do lots of study and construction of trades with edge. So make it a really robust one. All right, Jeff, on a scale of 1 to 10 for a big picture, what are you thinking?
I mean, I thought this was actually very good. I had it at like 9.2 probably. And the reason being is because you clearly identified what was happening in the bigger picture. You clearly identified the areas that were very important to you in this trade. And although we did identify a couple things that you could do better, this is a very, very good start.
Thank you.
I think you're a little bit of an easy grader, but okay, 9.2.
I think this is-
Let's move on.
Yeah, all right.
Just to include too, we do have, relating to what you had said, let's just go to here, technical analysis. We got RH here now. So we got the chart, we have the 20-day moving average, which is our red line, 50 days are blue, and we have our year-to-date premises. So we have earnings, and we're gapping up into where we can see is the year-to-date and the year-to-date VWAP high. And if we look left of the chart, 20 days ago, which is our red vertical line, price had gapped up into this premises, and we could look at what did they do. It completely failed, right? We look left of the chart, we have the vertical line that's 50 days ago, just left of the 50 days ago, just left of the data 50 days ago. We have a bounce, a rally that rallied right into this premises and failed epically again. So as we had this gap up on earnings, we said that we're seeing a similar pattern here over and over again. So that was the key context that we're seeing from here. And then we're digging into the technical analysis even further to just make an objective view, where we just broke it down saying that from just simple technical analysis that the RH is trading underneath the 200-day, giving that a -1. Price is trading under and rallying into its year-to-date VWAP and year-to-date VWAP high. We're giving that -2, which we've seen in the past, it's rejected. The 50-day moving average is declining, and right, although price is just trading above, the slope is declining.
When you're saying -1 and -2, what are you meaning by that?
So out of these indicators of 3 moving averages and 3 VWAPs, we're just kind of giving a positive score and a negative score from it to be objective on our technical analysis. So with that being said, is that if we're trading above an average, we're going to give it a positive score. If we're trading below, we're going to give it a negative. And so we can see here that the overall technical setup is when we place this on, is we're giving it a -4 out of 6 as it layers into the resistance. So the only positive factor from the technical view is that the RH is just holding that year-to-date VWAP low, which we can see is the gold line that's been holding this up. Every gap since April 2nd, as we mentioned, has been sold into, and the stock's been just showing relative weakness.
Okay, Jeff, technical
Let's
analysis
go back to that real quick. Let me go back to this.
on a scale of 1 to 10. What are we giving them?
There's some really good positives here. We love when you can systematize anything, and particularly when you can systematize the quality of the opportunity that you're looking at. So in this case, you're creating a scoring system which is systematically allowing you to look at the opportunity. I get concerned with this because there are things that you're missing within this system. Very simple things that really could be easy to capture. It's trading below its declining 200-day moving average. Well, the declining moving average could be one. Trading below it could be a different one. It's also trading under and rallying into its year-to-date VWAP and year-to-date high. -2. Those are great, but how far under? Is it within 5%? Is it within 10%? Like, those are little things that can make a huge difference when you're going back and looking at not just this opportunity, but hundreds of opportunities over the course of your trading career like that. You are correct that overall the technical setup is weak, but I'd like to see a little more evolution in the way that you're scoring it. I do think it's very good though, and I will stay soft in my scoring.
I'm gonna give it an 8 out of 10.
I was gonna do it 8.5, but
I know,
8
that's
out of
why
10
I got
is
in there.
good. Okay, there you go.
All right, that's an 8.
Okay.
And it's funny, we're all fractional in different time frames. And I literally was thinking about the percentage of the daily VWAP and the 2-day VWAP as I'm getting these plays and starting to study that. And then
This is
if
exactly
they're a certain distance away, so it's so relevant right now. What you're
This is
saying.
exactly why you do the playbook exercise, is because we could conceptually come up with the best opportunity. We can sit here and talk about the best things that are going to occur. But what we're doing by doing the playbook is you're getting more specific just by doing that exercise. And then you're allowing yourself to come up with what a lot of people would call as creativity. But really it's just you understand the reps and you understand how these things play, and you can think about, what's the spread on this anchored VWAP versus that anchored VWAP. And then you extrapolate that out and people are like, wow, he's brilliant at coming up with these setups. And it's like, no, you've just done the work.
Yeah.
It's really not rocket science. It's just you doing the work, and you recognize these things over and over, and then you stay curious and you pull on some threads and find some edge there, and you pull on something else and you find some edge here. And all of a sudden it all comes together and it looks like you just pulled this out of nothing, but it's just these little pieces that all get put together, playbook after playbook after playbook.
Yeah. The little things make the big things happen.
They do.
So, heading over to Felix here.
Yeah,
Good accounting background.
I'm gonna take over this slide here because we came up. This is a little bit more about the stock story. We had earnings on the day before, then after hours. We had a positive reaction to it because they reported revenue that was slightly under or at the estimates. They had a 12% growth year over year. And what was surprising and what I believe to be the catalyst for the first reaction up, the reported EPS beat. The market was expecting a negative EPS and they reported a positive EPS. Non-GAAP. And so this is first of all quite a good sign. They're keeping the outlook for 10% growth of the year under the assumption that the tariffs will not change. This is a bet, in my opinion, this is a bet from the company, how the market will behave. For me personally, this is not a solid assumption because they have absolutely no control of this. So they tried to reduce the China sourcing from 16 to 2%, which did not happen yet. They had lower operating margins than the year before. And so I had a quick look at the income sheet of the company from the company's website. And that's actually why we wanted to show you this, because it took us 3 minutes to pull this sheet up, have a quick look at it, and to get a framework around these reports, around these earnings reports. You look at it and you see margin did not improve. The stock is weak. You look at the net income and you see that this net income solely came out of a different company, Aspen LLC. They claim that represents the proportionate share of the net income of our equity method investments. So that means that RH did not make any money, but the whole income of this company came from another company. So why would this EPS beat matter to the stock story? They did not improve their core business. They adjusted maybe their numbers to shine a good spotlight at the right places to impress the market. And I like to look at it. I mean, I'm not an expert in this, and I don't think you should or need to actually put in a lot of hours into this, but this is an example where like 3 minutes, look at it, and then you have an idea about this. And together with the technical analysis from James, we put up a trading plan for this.
That's literally the single best. In terms of intraday fundamentals, that's the single best description that I've actually ever seen.
Oh, thank you.
I mean, I can't stress enough how much I love how you went to the income sheet and very quickly, and Spencer would love this, by the way, because Spencer loves all things that point out how foolish people are in Wall Street. he could make a living off of that. Maybe he actually probably does. That was terrific. That was really good. There's two important principles that I want to point out that are super important for the younger people in this room with a little bit less experience. Anytime you see, the first one is, anytime you see lower operating margins, I actually think that should be in red. That's a huge deal. The street hates when margins are going down. The street shoots first and asks questions later about companies that have margins that are declining. Essentially, for the youngest people, that just means whatever they make, they're making less money on it. That's terrible for a business. It's one of the most important things to look at in a report. Our margins, and the opposite of that is anytime you see margins are increasing, the street loves that. All right, it's one of the most important things to call out of a report. And the second thing is from this is that you pointed out and got right to the heart of the matter of how is the core of the business doing? And when you're looking at an earnings report, you do want to call that out. How is the core of this business doing? And so there can be lots of times where, hey, maybe somebody sold some real estate that they had on the books for a long time and the revenue is higher and the profits are higher, but that's not what they do. They just have a piece of property. Or they've got this fancy tax loss that they can take and they take it and the numbers look great, but it's a one-off, and that's not what they do. They're not in the business of tax harvesting. And then, to the flip side of that, it can be the case where, the core business is really expanding and they're growing. The street loves that. Okay, but I just, this is so good. I don't even have to go over to the board. Like it's literally the best that I've ever seen in this room on intraday fundamentals.
Thank you.
Great job. 10 out of 10.
Awesome. So we came up with a trade strategy, and we learned from Jeff that get into resistance or support, and we had a look at what was working in the markets before. And since James pointed out the technicals, we came up with two scenarios. First scenario, gap into resistance and push higher, so basically bull case. That would have meant after the after hours pre-market consolidation around $212, it would continue to 220 area, consolidate again, and breaks above with a target of 226 and 230. That was scenario number 1, but we favored from the beginning scenario number 2, which was gap into resistance and fade, which it actually did. We assumed this would spike, this after hours pre-market earnings reaction would continue right at the open and then fails. And we were looking for a reversion to VWAP and then target the pre-market lows. We thought, okay, maybe this is got some sort of consolidating at the pre-market lows and then fails again down to 188 or 190. Yeah. So our risk allocation was an A, not an A plus because of the liquidity. This is not a highly liquid stock, so first of all, no big size is possible. There's a ceiling to the scalability of this whole play, which is not our problem at the moment. But our problem could be slippage and a widening spread on volatile, brutal moves. So we would grade this as an A allocation, not an A plus. And we would go for around 50, maybe start to scale into the position, especially if this opening high did fail. And scale into the position while going down.
Jeff?
It's good. You guys are trading the setup there. And I would like to see, we talked about it yesterday and the day before, of trading the setup versus the trade. You have the setup there. The one thing that's super interesting to me is if you have this setup playing out, you did put the subset variables in there of sort of the trades, but they're not called out.
Put the trade there. What kind of trade would it be there?
Sort of there, but they're not specifically
Yeah.
called out. So I think it's still very good. I don't like the fact, the one thing I really don't like is you have scenario 1, which is not the one that you're looking for. And you didn't talk about the risk, unless you're gonna risk 50 to 80% on the long.
No.
You guys just made a very compelling
good-
argument to not
Yeah.
risk any money on the long. And you have scenario 1 saying, we'll put some risk on the long.
So that's a good point, and I think that just wasn't thought about. We definitely would want to be thinking that the A setup was the gap into resistance, and then would be doing a smaller size on the chase. But I didn't even think about that. So that's
You want to be really careful with this. That's why the
Yeah.
very first thing we had everybody do here, the very first day, was write out your sizing scorecard. It doesn't seem that important, but the difference between, just using an example from today of some of the trades that some of the traders made, we had 2 guys that are about 2 years in now put up one of the biggest trades of the month because they recognized it was an A plus opportunity. They might not get another A plus opportunity for 2 weeks. They're still gonna be trading every single day for 2 weeks. They're gonna be in there every single trade. Their risk allocation is gonna be completely different for anything that's not A plus. So it seems like an intellectual exercise, but it's a habit that you build and it permeates everything that you do so that it can become instantaneous.
So for something like this, we'd want you to get an 8 out of 10 or better. I don't think you get to 8 here. Why?
Well, there's no stops, number one. Like a potential area where we're wrong. I think that definitely should be inserted. I think Jeff hit the nail on the head, and I think for future references, if I'm going to put these scenarios, to make sure to allocate the proper risk for each scenario. So that's 2 things I think that definitely could use some improvement. I do this on a lot of the trades, which what Jeff said was almost what I would look for, is like a backside.
Okay, and then there's another reason, which is what? And it's the big difference between what we're going to teach you guys here. You guys are here to become skilled, active, bionic, discretionary traders. You're not here to generate ideas and then push the buttons. You're here to generate ideas, but then also be a skilled, active, bionic, discretionary trader. Skilled means what? Being really good at what?
Risk management.
What's being a skilled trader? You're really good at what?
Executing.
Execution, right? Execution. And so I don't know what you mean by fails. That's not specific. That's not good enough to be a skilled, active, bionic, discretionary trader. You've gotta have some variables behind exactly what fails means. Maybe it means a break of a 2-minute candle. Maybe it means description of serious weakness that's really clear that I can see on the tape. Maybe it's a break of a trend line. Honestly, I'm not really that concerned at this point about how you define it, although I would be later.
Yeah.
But you gotta define it. And it's the different, and not defining it is the difference between why at our firm, our traders outperform people on the street in our space, and why other people in our space who even make money can't hold a candle to our best traders. It's because they're not specific enough about their entries and their exits, okay?
Yeah.
So I wanted to define that. So we're gonna go 7 on that.
Okay.
Let's move on.
So we're getting to the trade management. The next slide, we're gonna zoom into more detail. This is a 5-minute chart. I just wanted to give us the aftermarket earnings reaction. And Garrett has even talked about it too, is putting that anchor VWAP from the event, which is that maroon line, which also kind of correlates with Mike was just saying, is what would confirm that breakdown? What would confirm that failure of 200? And I was monitoring that anchor VWAP to be start to act as resistance. So this is just a 5-minute chart of the aftermarket and the intraday trade action, and now we're going to just zoom in here and talk about what happened here. So in the pre-market, we had the gap down from the earnings reaction, and then we filled that gap. We could see in the pre-market, we got a little shakeout on the opening drive, and then we ripped up to the 222 premises, 220. So ideally, we were looking for it to hold the aftermarket high. So this was the scenario where we looked to see it break above 220. In that bullish scenario, we would have been liking to see the 220 hold, right? And we could see we had a fast failed move and almost like a backside short, right? And then that's actually where I started to enter on number 1 was the entry of the break of the VWAP for a fashionably late, risking the high a day. And this is more of like a feeler because we're still in the range right now. And I'm playing my bias, right? So then I covered into the low a day premises, but then once we rallied back up and held underneath the VWAP and retested the 9 EMA, at bullet 3, you could see here that we added back to on the reclaim of the 9 EMA, and we actually then added to the short again on the break.
So one thing about when you do playbook trades, when you do your playbook trade, we just go over one trade.
Okay.
So I love how ambitious you are to go over lots of trades. But when you do a playbook, it's just one trade, very specific on the variables, and you just go over that.
Okay.
Okay? Second thing, so you've got like 6 trades here. So maybe I'll let you pick one.
So
Let's just pick one.
Let's stick with the opening range break here. I bullet 4 here. All right, so we had the opening range break at bullet 4. So you can see on the opening drive, we dipped to the earnings VWAP, that maroon line. We rallied up, right? This was the change in character at bullet 4.
This one is 4?
At bullet 4.
Yep.
You can see that at this point, we've broken the low a day already. And then kind of preceding that was like our opening range break. So we broke the low a day and we're retesting this. So support is now potentially being retested as resistance. We're risking that blow off candle, and we're looking to trade this into the 2-day VWAP, which we covered into 198, which was a little early. We actually at 0.7, we covered into the week to date, and
Okay, so 4 is the entry,
4 is the entry,
7 is the exit.
7 is the exit.
Why the entry? What's 4? Why are we entering there?
4 was opening range break.
Okay.
And it's a little bit,
Okay, good.
Yeah, before it was
And then
opening
cover
range.
is,
Cover was the week to date view app and prior date view app, which
Okay.
they were converging.
got it. So like that trade, okay? And I think that's probably a move to move trade. And I love that you're working on move to move trades at the beginning of your career. I think that's great to learn how to scalp, make move to move trades. I don't think though, and I think that's great. Okay, I think that's great. And I'm going to encourage you guys to do more of that because I think that's how you really learn how to trade. But this is not a move to move trade. Okay, this is a trade to hold. Why?
The bigger view, the bigger picture.
Yeah, I mean, if I were to ask you guys, hey, in terms of a news catalyst on a scale of 1 to 10, and we're always looking for stocks that have catalysts. Either they have a technical catalyst or they have a news catalyst. This has a news catalyst, right? This has a negative news catalyst, right? On a scale of 1 to 10, how would you grade this in terms of negativity? 10 being super negative for a news catalyst. What would you say?
I would say 9.
Yeah, that's what I was
What would
saying.
you say?
I was saying 9
Yeah, what would you say?
At least a 9.
Yeah, at least a 9.
with the poor
At least a
technical.
9. And when you get something with this negative a news catalyst, what's it gonna do?
I'm struggling with this because if I'm the only smart person in the room and everybody around me is stupid and buying this, I'm wrong.
Certainly. And then if that were the case, you would get stopped out,
Yeah.
or you'd have a system where you would exit because you notice that the stock's not going down anymore. So it doesn't mean, I'm not suggesting you get short and you don't do anything.
Yeah.
I'm suggesting when you have such a negative news catalyst, you've got to turn on your trade to hold hat.
Mm-hmm.
All right, we had, I won't mention his name because he likes to be really secret, and he told you guys the only place that he comes to talk is here. But don't tell anyone. Remember, we had a very large prop firm owner here who doesn't like to be named, who we will not name. And he said that there's a difference between scalping, which his firm does a lot of, and then you got to turn on your trade to hold hat for certain trades and not scalp it. That doesn't mean in a trade to hold, if you're sitting there and you're like, I think it's going to go down, I get it in a good spot, and it's not going down, and it's not going down, and it's not going down, it's not going down, that you don't get out, because that would be part of your system.
Yeah.
But what it does mean is that this is something to try and capture an intraday trend on at a minimum.
Mm-hmm.
That is the focus for it, because you're not going to get, I think this is like a 9.5 out of 10 in terms of a negative news catalyst. You're not going to get that a lot.
What?
So I think you got it. And if you're at a big hedge fund or a big institution, how long does it take for them to start selling out of their position?
Very quickly.
Multiple days, right?
To go through
To start,
compliance.
yeah, but
It's going to take them days, and they've got a lot. It's going to take them days to get out of this thing. So I think you gotta find a spot to short this thing and let it run. Give it a run. And if it doesn't work, that's fine. But this is just not. This is not a scalp.
Yeah, and the plays that we just studied with Garrett too, like his opening drive has these blow-offs, and they've all turned into trend trades,
Yeah.
so to speak, with these when they gap out of the range and blow off.
Yeah.
So it's just a pattern.
It's just too negative a news catalyst not to let it run.
Yeah.
So I have a question.
Yes.
Like, what would your entry be on this? With the knowledge you have, and you have this price action on the open,
Yeah.
would you short it against the high?
I would have shorted it, and I don't mean to like. So I didn't make this trade.
Yeah.
So I want to be clear about this.
Yeah.
But based on what you guys told me, I would have shorted it here,
Mhm.
and I would have set a stop above here
That's where number one.
and given it a run.
Okay.
I would have loved the initial up move right on the open,
Mm-hmm.
and I would have totally wanted to use that to my advantage
Mm-hmm.
because to me, I'm making a trade to hold, and so one of my trade to holds is going to be a price discovery right on the open that is unsustainable and an overreaction and counter to my thesis, and I'm going to let it show me the top and fail and start to go down and short it and cover it above the high. and I'm gonna let it run, and I'm not gonna exit the trade until, I don't think I would exit the trade. Get the chart, I would have covered it in the close. I mean, I don't mean to be, I don't mean to be, like, it's so easy to do. But that would have been one of the trades in my playbook.
Right.
Now, those trades are gonna have a low win rate, right?
Mm-hmm.
And of those trades, I certainly, if it would have broke a trend line, I would have exited. Or if it had gone parabolic to the downside, I would have exited. Or if it got above VWAP and held above VWAP, I would have exited. Or if it held above a significant consolidation area, I would have exited. But none of those things happened. So it doesn't surprise me because of the news. Because eventually people figured out what you figured out. No matter what the headline number was, right? And that's good that they had a headline number that could confuse some people. But if you actually, like you did, read the balance sheet, they were, this is smoke and mirrors. All right. So, all right, I thought that was pretty good though for the trade management on 4 to 7. I think that's an 8.5.
And then the last part of this though is it ended up getting to that month-to-date VWAP, which has just been a really common theme that I've been noticing. CoreWeave today gets right to the month-to-date VWAP, had an epic bounce. Tesla yesterday to the month-to-date VWAP. So there's a very interesting pattern going on that I'm observing there. So moving on to the technology here. So we used our trading view to anchor our VWAPs. We used the year-to-date. We used our earnings report. We use TradingView to anchor our VWAPs from the year to date, from the earnings report, and our prior low and prior high area. We've incorporated the multi-day VWAPs, the week to date, 2-day, and the daily to help us find our key levels and trend structure, and gauge who's in control of the trend on the time frame. We marked our aftermarket high, pre-market low, aftermarket high and low, pre-market high and low areas. We monitored, we're looking for our volume on the blow off and volume for confirmation through our levels. And we made sure we set our alerts at these key levels at 200 at our pre-market levels.
So 4, your entry was what?
4 was a opening range break.
Okay, and so when you're trading live, what you want to be doing during the trading day is setting alerts for something like that. So this is like low of the open, right?
Right.
So you would have wanted to, during the trading, during the open, set an alert if it gets below the low to alert me.
Right.
And that would have been a really good use of tech. Does that make sense?
Yeah.
You're constantly going to be using and resetting alerts throughout the day to give yourself signals to enter ad size.
Because we knew once if we did break that and make lower
Did
lows.
you set an alert for low of the day on the open?
No.
Okay. That would have been a good thing. All right, good. All right, you guys are new with technology, so I'm gonna punt to give you an 8.
And we're leaving it off with the trade review here. So we followed the morning game plan that we were favoring the stuff at the 220 level. Our execution aligned with the levels and structure. We're looking for the potential fashionably late we're looking for the stuff, the reversion to the VWAP, the breakdown from the VWAP to the pre-market low, and that's where we really took number 4 was that opening range break, and that's where the trend trade started to hold, started to really take place. So I just wrote, this is actually one of my best trades ever that I've taken, which was pretty exciting. We did a gap into resistance. We hit it with the fashionably late into the low a day, and then we tackled the opening range break on that break of low a day, and we traded it into the month-to-date VWAP. It really got to get a lot of juice out of this. So what was really important was to just make sure we have a clear plan with the defined levels and risk parameters. This makes our execution fluid and decisive, and it was just important to know that what type of trades could potentially set up at key levels, so we could be ready to take these trades.
Okay, so when you're doing a trade review, I think one of the things that people leave out that disappoints me, it's like one of the number one things people leave out is what? What do you think people just continually leave out in their trade reviews?
How can I get bigger?
How can I get better?
What should I have done better in this trade?
And I thought you were going to say that, and I'm
Yeah.
glad you're saying that. And that isn't the answer that I'm looking for.
Profit.
What do people leave out? How do you get better at something? Like what's like super important to get better at anything you want to become great at?
Repetition.
What do you need to recognize?
What you're doing. So maybe noting how much I risked.
What do you need to recognize?
Where you went wrong.
So we've had that answer, right? All of you have given me examples of things you could have done wrong. Okay, how do you get great at something? And what needs to be in this trade review?
So one thing that we talked about was that it was a trend trade, and we didn't. That's how I can start to make this better. Is starting to realize the higher time frame view that what type of
How
trade.
do you get good at something?
Practice.
How are you guys going to be
Practice.
7-figure traders? Is it going to be us sitting around talking about the things that you do poorly?
The things that you do really good.
Yeah, you people make this mistake all the time. You've got to find out like what you did really well. You found a great trade. Why was it a really great trade? Like, what did you do to really find a great trade? And there's a clear answer to that. And what was it?
Looking at the.
You do something here that's a great example. People write books about stuff like this. Okay, what is it? What did you do really well? What's the most important thing?
We had it set up.
Reading the report.
The balance sheet.
Okay, and that represents what?
Due diligence.
What does that represent? So when you have a trade, right?
Preparation.
When you have a trade, your best trades are going to have really big catalysts. All right? They're either going to be news catalysts or they're going to be technical catalysts. Those are going to be the best trades. You've seen us trade Circle on the desk, and the big catalyst for that is not news, but what?
Overextension.
It's a great technical setup. In this case, it's an overextension. Before that, there may have been. It's an overextension. It's an unusual overextension. And you can go measure that. You can go take your Bollinger Bands out. You can go put math behind that. It's a complete overextension. That's a huge catalyst. The other trade something like that. Right. In this case, you've got a terrific news catalyst. We said it's a 9.5, right? I think it was a 9.5. We said that's unusual. The reason why this trade works and what you guys did well is you found a stock with an unusually negative news catalyst. That's why it worked. And you want to go find more trades that have big catalysts. That will allow you to make really good money. This was a terrific example of a negative news. That's what you did really well. And so when you do your trade review, I want you to say, with our collaboration, we found an unusually negative news catalyst. And you want to do more of that. Because that works for you guys.
Yeah.
You do not become a 7-figure trader harping and carping and nitpicking about the little things that we are all human. We can all point out our shortcomings. All right? And not to suggest you shouldn't do that, but that's not how you make a lot of money. You make a lot of money by understanding that you did that really well. All right? And to find more trades like that. And so on your trade review, we're going to give you a 7.5 until you point out the things you do well. But I thought that was pretty good. Unfortunately, we've got to give you a 0 on reading the tape because we don't have that. On your diligence, a 9. On stock selection, I thought this was really good stock selection. This is a 9 out of 10 in stock selection because of the negative news catalyst. The one thing I just didn't love about this stock selection was it would have been better if what? It would have been better if technically it had been a better setup too, right? You did have a really good news catalyst, but it was a little bit, I don't know how the technical setup on the daily. Does that make sense? You'll find better ones. Does anyone want to add that up? What do we got? Who's gonna add that up?
76.2.
Oh, man, the tape.
Man,
We got 2 points on the tape.
This tape.
All right, well, next time include the tape. Obviously, you're showing the ability to get above an 80, and you did a lot of things really well. What did you guys think?
I thought it was awesome. I got a lot of feedback. I learned a lot about my trade and about myself through the experience through this trade.
You guys disappointed that you didn't break 80?
I'm very disappointed. I like to win. I had an expectation, but it could be, we did miss a key component of the playbook, which is reading the tape. So you get what you deserve.
Well, I wouldn't be too hard on us. I think we made a pretty good job here since we, to be honest, nobody uses the tape right now for trading. So we thought this was not a key variable to our success. So we left it out, and that was a mistake. Next time we're gonna do better.
I think that overall we did a great job. We just forgot to include the tape, which is easily fixable. And we really, what I think that is maybe the most important part is identified a really important change in fundamentals that people didn't really look into. Not everyone goes to the extent of looking at the actual report and then identifying that it's a little misleading. That's where the hedge funds and big institutions come in. They see that and they go through compliance, offload. That's where you make your money.